Welcome to our final market update of this year. We're advising our clients to seek advice on their future project pipelines and ask the question, what are the opportunities for 2023 as we enter a new phase of the market cycle? It's been a turbulent few months as we continue to see the fallout from the mini-budget and autumn statement, compounded with the ongoing worries about inflation and the cost of living crisis. We've also seen UK economic growth forecasts lowered and talk from the Bank of England of an upcoming recession. However, this brings with it the possibility of potential easing in both the rate of tender price inflation and supply chain pressures next year. In this update, I will take a look at a macro overview of market conditions. Mike will cover construction output and key considerations for the supply chain, with John giving us the outlook from the labour market, finishing up with results from our recent M&E contractors survey. So let's start with the macro overview. In the last quarter headline, UK inflation hit another high, prompting the Bank of England to raise the UK's base rate of interest to 3%. And it looks as if they will go higher still in the coming months. Higher prices will link to greater energy costs, fuel bills, food and a tight labour market. Well, despite these broad pressures, UK construction output growth defied the odds and rose 0.6% to another record high of £45 billion in Q3 2022. While construction new orders rose by 6.4%, remaining above their 5-year average and suggesting the order books remain strong. Mike and John will now take you through the key findings from our survey data.
Thanks, Kerry. As we've mentioned, UK construction output grew in the third quarter, beating market expectations. In fact, in terms of overall activity, UK construction was the only main UK sector to expand in recent months. These high levels of activity were largely attributed to a strong pipeline of unfinished work. However, worries about the long-term economic outlook, high input prices and rising borrowing costs mean growth expectations for the year ahead remain subdued. Over the last quarter, we actually saw supply chain performance improve. There were fewer instances of longer delivery times and an easing of transport pressures and material shortages in comparison to previous quarters. Looking ahead, we expect to see more active engagement from the supply chain as contractors try to secure their future pipeline of work. With anticipated reduced volumes of new work coming to market in 2023, this will lead to the possibility of greater contractor capacity, as well as increasing competition in tendering for many sectors.
Let's look at the labour market outlook. Construction vacancies continue to remain at record highs as the industry battles a tight labour supply. The combination of reduced employment rate and record vacancies sees a significant pressure for the industry in terms of future growth and productivity. As Mike reported earlier, a sustained slowdown in new order growth could see vacancies fall. However, the data suggests that in order to meet pipelines of unfinished work and reduce backlog, labour requirements will remain strong and construction vacancies elevated in the short to medium term. We therefore see labour as being the key input cost driver in 2023 as wages attempt to catch up with cost of living pressures. In our recent survey, M&E contractors reported strong order books in the short term. However, interestingly, there appeared to be capacity in the market moving into 2023, with only 2/3 of workload currently secured. It also reports that trade costs are being driven higher by the continued war in Ukraine and the subsequent price increases associated with fuel and component materials. Unfortunately, this is further compounded by the weaker pound, materials availability and the aforementioned labour vacancies. However, surveyed M&E contractors pointed towards opportunities for growth in certain subsectors, these being the rise in smart building technology, the drive for net zero and modern methods of construction being used more widely in the market, providing longer-term growth opportunities.
In summary, to mitigate against the risks in this current market, we continue to recommend securing your cost, programme and resources early, and planning ahead to avoid unnecessary supply chain challenges further down the line. So in our final message for 2022, we recommend you seek advice on your future project pipelines and ask the question, what are the opportunities for 2023 as we enter a new phase of the market cycle?
If you want to find out the details behind the headlines, read about it on our Market Intelligence website. Follow our channels to keep up to date or get in touch to speak to one of our market experts today.